Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the three amigos. And I wanted to do a YouTube video that matches a tweet that I sent out. Yes, folks, I am now using Twitter a little bit. You can follow me at one rental at a time. And basically, the tweet this morning said, Kevin, meet Kevin. Start shopping for HouseHack now. Stop waiting. My understanding of what MeetKevin is doing from his videos is he has collected something like $25 to $30 million. He stuck that in treasuries, making, call it 4%. And he's like, hey, I'm going to wait to start shopping for deals until sometime next year, Q2, Q3, Q4. And I'm like, dude, what the hell are you doing? Start shopping now. If you want to get your wedge deals, you want to be doing that when nobody else, when you have no competition. Why are you waiting for somebody to ring a bell? I think he's using his stock experience, right? Timing the market in housing. And that's stupid. You have cash. I got two deals out of the MLS for 30% more than or less than list price because I had cash and could close in 10 days. Think about what you could do with $30 million. Shop now. Shop before Christmas. What are you doing, MeetKevin? So I just wanted to rant on this a little bit. We'll go to Dion first this time.
No, I was watching the same videos. All but one of my deals were purchased between November and February. And it wasn't like I planned this is when I'm going to buy. That's when the right deals were there, when there wasn't a lot of competition. And people talk about right now, and we did in episode 1, some home buyers who bought in the last couple of months are underwater because this time of year, prices come down, values come down. Doesn't it seem like you want to buy when the value is down, when the price is down? That's when you should be shopping. I totally get if he's waiting for the springtime for the active market, he's going to say, okay, I'm going to wait until all my competition comes out of hibernation.
Rates are down. You know, there's more I mean, what do you do? Why do you? I like to fish where I'm the only fisherman on the lake. I don't understand. Matt, what do you think? Do you think Kevin should start shopping now?
That's a sewage overflow you're fishing on. You're not going to catch anything there.
But damn it, I'm the only fisherman there.
It is peaceful, smelly, but peaceful. No, I mean, I did a reaction video to Kevin's video, so Kevin,
wow. Nice.
So a little bit, a little bit into the life of the lumberjack, everyone's in bed, everything's quiet.
Oh no.
I get into bed and I get my phone out because I'm going to start, watching some YouTube stuff and watching some of my friends, with Mike and Dion and Millennial Mike, watching some of my friends. And then because I hate myself and I don't like sleeping, I have to watch some other of these guys. And so I watch MeetKevin, and MeetKevin does the article on 5,000 Lennar homes. What he doesn't tell you is that's 5,000 homes over 6 states. What he doesn't tell you is that 5,000 homes at today's current rate of market sales and absorption is 13,000 a day. It's not even a fart in a stiff wind. It's pathetic. It's 5,000. It's nothing. And at the end of the day, Lennar, I get it. They're a builder. They got to sell. And so what do they get paid to do? They get paid to build. They can look at, hey, we'll have much lower margin on these 5,000 homes because we need to start the next track. However, we're going to start the next track more conservatively. Pricing's come down. We're going to build a whole lot less. All of those things.
They're running a good business.
Right. Because that's what my reaction video was exactly about, which is like, come on, Kevin, you can't call yourself a real estate guy and be this far behind. You can't be this far behind. And HouseHack has an idea. Yeah, I'm pretty sure we don't need a company to do that. But at the end of the day, let's look at the facts. The facts are, yes, builders are going to be putting that stuff out there. Why on God's green earth? And by the way, P.S., Mike, when did $30 million become a lot of money for a startup?
Yeah, that's not that's an okay, pre-series A, but whatever.
That's nothing. It's really, 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 really small. So I hope it goes to 300 million because then it's a number worth talking about, because with leverage, you can actually be buying at that point about $1 billion worth of real estate. Yeah, now we're talking, but at 30 million, big deal. Like there's tons of single-handed investors that have way more than that sitting on the sidelines waiting. So my answer to MeetKevin, just generally speaking on the housing crash is, if you're really the expert, you're buying now. You're in the market now. You're creating deals now. You're calling Lennar when you see that advertised. You're like, hey, listen, I have a fund and I can tell me about where all your tracks are.
Yeah.
And I want to buy some.
Yeah, I'll buy that one and that one, but not this one. Yeah.
Exactly.
So the problem that we have with the clickbait large numbers, 5,000, right, not being presented as what a small percentage that is of the overall, is that it's going to lump in builders
Right.
As in all builders. And when you have Lennar, they're like the second largest builder,
Second.
right? Okay.
Mm-hmm.
So they don't have a rental side large enough to just say, okay, all of our property management, you guys assume these 5,000 homes.
Right.
A lot of builders are building 2 or 3 houses a year. And when the prices change, interest rates change, cost of materials change, and they can't sell to take the profit that they were looking at, they pivot.
Yeah.
All right, it's going to be a rental for a couple of years. And then when things time right, we'll sell it. Large builders aren't going to be able to do that. And they don't have the bandwidth to do it, really.
Right.
So we're going to hear the large companies doing these things, and they're not going to be selling to mom and pop investors. Like you and me aren't going to.
They want one check. They are giving a discount for
200
speed.
homes in an area. Exactly right. So it's not going to have the impact that people think.
And oh, by the way, it's what we called on this channel. I got
100%.
receipts. You can go back 6 months, and I said this is exactly what they're going to do. They're going to audit their portfolios, figure out where they don't want to be. They're going to take those portfolios, package them up, sell them to one buyer, and be out. They're going to be building where they can sell. Builders are not going to stop. And then all of this comes back to, I want to bring up a report. This is what Lance Lambert and I, Fortune editor and our writer, talked about, I think 2 weeks ago. So Case Shiller came out, and I forget what it was, negative 1.2% month on month. FHFA up 0.1%. Folks, this epic decline's not coming. MeetKevin, as far as I'm concerned, is doing his investors a disservice.
Yeah.
If he is waiting for 6 months, which again he says in his videos, rates could be down, which means demand will be up. The builders who will spin off will be done. Lennar is getting this done in Q4 on purpose. On purpose.
Of course.
Right? They're going to go into 2023 building less in the best locations.
And have no inventory.
Exactly.
Right.
They're gonna have no lots. They took all these options and they're like, hey, here's $2 million on the land lot. I'm out. I'm not, sell to someone. Dude, it's happening exactly like we talked about. It's awesome to see. So hopefully that tweet gets his attention. Hopefully this video gets his attention. Maybe he is, because one thing that MeetKevin needs to do, if I was, I don't know, COO for a day, is he needs to be finding his 3 markets. And again, if you do what I talk about, get your buy box, and I mean, that takes time, right? I'm not telling him to go buy in some other areas quickly, but he needs to be doing the work now. And maybe that's why he's flying around on private jets and all that stuff. Maybe he's doing that work. Doesn't seem like it, but maybe he's behind the scenes. So if he comes into, let's call it Valentine's Day, just to pick a date, February 14th, and he goes, okay, I got my 3 cities. I got my 3 contacts. We got 15. Maybe he'll surprise us. I hope so. But yeah, he needs to be writing offers today. So I don't know. Yeah.
So there's a reason MeetKevin's in your book.
Yeah, exactly.
Right? On the fundamentals, he can talk to the average person and say, figure out what your resources are. Here's how you buy cash flowing assets. Here's how you make work optional. I mean, he literally has a track record of doing that. But then you add stupid money of a couple $100,000 a month from YouTube land coming in. And there's a way of looking at money where it becomes not real.
Yeah.
And as an
Monopoly
investor,
money,
right. As an investor, there's a kind of a superpower there when you can realize that money can make money. But when you start dealing with such large numbers, it becomes unrelatable to the average person.
Yeah, I agree. Yeah. Folks, we can get to 4 buy box. This one rental at a time it's going to dominate the next couple of years, right? I think the last couple of years, everybody could make money. It was really easy. I think the next couple of years, and I really got this from Matt, the operators are going to win.
Yeah, for sure.
And
100%.
The pivots just started. We're going to be documenting everything. I can't wait to see if this flip sells, because again, if you were listening to crash videos, I was an idiot. I had people calling me an idiot for buying that deal at 203. All right, we'll see.
Hey, Mike,
we'll see.
You're an idiot. You're going to make 30 grand in 80 days.
Yeah. Oh man, sucks.
Yeah.
And oh, by the way, what you don't know is I'm also paying myself 10% interest on the money.
Yeah, exactly.
So I'm going to make that on top of that.
That's the worst.
That's just horrible.
You dummy.
Here's
Dummy,
a
I'm such an
question.
idiot. Yeah.
How many of your investor friends
Yeah.
have told you not to do what you're doing at times because they were timing the market?
None. Anybody I know who, even if you're a one rental at a time fan and you have 0, everybody is shopping. I have a note from somebody that I think is in the other room. They came to the event, Dion, you were there, and she asked a question, and it was a Beth. This is an awesome story. So she basically says, hey, I've been doing the work. I'm writing lowball offers. How does an agent receive this? And Beth basically said, hey, if you give me the story, you tell me what you're doing, you're legit. It's my duty to, do that. And then I came over the top and said, that's all we're doing today, folks. We are writing disrespectful offers, lowball, whatever you want to call them. We are only writing great offers, which means they're below list. She says in her comment, and I read it yesterday or the day before, and I have it on my wall. She's like, I didn't believe it, but I kept doing it. And lo and behold, we just closed the deal, this and that. It's like, yes. So my investor friends are doing the work. I do not want to deal with people in the parking lot. If you want to be on my team and my family, we focus and do the work. A buy box is permission to focus and ignore. Let's go. Dion?
So the main reason I asked that question is because how important your rule is of audit your network.
Yes. Number 7, baby. Yep.
Last year I was buying a duplex, and I had the resources to buy this one duplex, and right across the street, another duplex, identical situation pops up. I have a friend who doesn't own any rentals but wants to. Reached out for advice. I say, I'm buying it. Here's why. I talk about the binder strategy. I talk about the cash flow. I talk about what's going to happen. What's going to happen in the market doesn't matter. If rates go up, prices go up, doesn't matter. You're looking for cash flow. Our friend, who is an investor, has over 30 rentals and is retired, talked him out of it.
Oh,
said, no, prices could crash. There's an eviction moratorium going on in California still. It can come here back to Washington. Tenants don't have to pay. It's a terrible time to buy. You have to audit your network, even amongst investors. If you have, because this is an investor who purchased 30 rentals decades ago in a different market, hasn't purchased in a decade, right? And is giving advice as an investor versus my friend didn't buy the duplex. And now mine is cash flowing a little over 900 each side. And
each side,
right? Yeah. So it wasn't a terrible deal.
That's terrible, dude. That sucks.
Right. So it ends up being the very first 12 months, it was like a 15% cash on cash return. But with the recent rent, and so next year it's going to be closer to like a 28. So I'll take it.
Yeah, that's just terrible. Damn.
But so everybody watching, look around your network. And so my friends don't watch this channel. They don't watch my channel. That's why they're friends, right? I used to take Vegas trips with those guys. The guy that wanted to buy and the guy that has the 30 rentals. But nope, in a couple of weeks, I'm going to be in Vegas with investors who are actually doing the work.
Yeah, yeah. And just in case you guys don't know what we're talking about, I have these 7 ORAT rules. These, again, people need to buy this, print them. You can get them for like $10 on paper, or you can get them like in bigger quality. Rule number 7 says, audit your personal network. Are they helping or hurting you? That rule is not for the good times. That rule, the last 2 years, was not important. This rule is vital and actually jumps to number 1 in the environment we are in, because you may have idiots out there that talk you out of doing a deal that could produce 28% yield. And they don't do it on purpose. They just don't know. So Dion, bring us home.
To MeetKevin, hopefully you take this in stride. If you made it this far into this video, you should be hunting for the deal every day, whether it's your money or your investor's money.
Well said.
Because timing the market doesn't work.
Matt, what do you got to say?
I like MeetKevin. I think a lot of there's a reason I was watching him. We just disagree on this point. I think that now is the time to be buying when there's uncertainty, when there's fear. I'm relying on a lot of these horrible agents out there, the 80% that are a bunch of dummies. I'm relying on them to be so afraid of their own shadow and the fact that they need to make their bills next month that they're talking their sellers into a number that's lower than what I'd be willing to pay.
Yeah, exactly.
Because they're that bad at what they do, because they don't know what they're talking about. It's
there are agents behaving. I actually Ty in my hub call yesterday. It's like agents are behaving badly, right? Horribly. Their commissions are down. Their lifestyle is too high. Like Brian Lebo talks about month of life or mole. It's wacky out there. So absolutely.
If you are a high flying agent, you're no longer experiencing the wind beneath your wings. Feel free to contact me at lumberjacklandlord@gmail.com. I'm more than happy to buy your Aventador from you.
There you go. There you go. Well, the one thing I want to tell MeetKevin, if he's still watching this, or if you're a fan of MeetKevin, let MeetKevin know this. I think you need somebody in your circle that is experienced in real estate, done a couple of cycles, and is not afraid to tell you you're making a mistake. And you're making a mistake, at least publicly. Maybe you're doing the work privately that we don't see, but you got to stop surrounding yourself with yes men, and you need to find somebody that's willing to tell you you're making a mistake. So yeah, you're making a mistake, bud. All right, guys, thanks. Take care. On to number 3.